All right, now that we have a clear understanding of risk tolerance, we're going to move into setting our investment goals with our risk tolerance in mind. So how does a person with, their basic understanding of the stock market, kind of where we brought them to thus far, before they really getting into it and we're showing them how to pick and what to pick and what numbers matter, how do we set some basic investment goals for ourselves? Is it more of a how much I want to make versus how much I want to make sure I don't lose? Or is a person just like, man, I want to make $1 million, in 60 days, how you see on some of these, scammy, quick fix kind of things, get rich quick. We're 100% against that. So I would like you to help somebody understand how to set their real investment goals as a intelligent investor, is that's what we're helping them become.
Good. Great question. Let me first start by saying um, it depends on the level you are in. So I would say someone starting out, let's say my son, he's 22 years old, or my youngest son who is 17 years old. He's investing very, very heavily. Investing in a lot of growth stocks and a
Mhm.
lot of tech stocks that would be a little bit more volatile. When I say volatile, that means it moves high real fast and it can drop high, low real fast as well.
Mhm.
But so say for instance, he has again, I'm gonna try to explain it plainly. He has $20,000. You know what? I don't even go that far. $1,000, right? $1,000 to invest in. If he loses $1,000, he's 22 years old. He has another 20 years, to make that up, right? So say for instance, you're in your 30s. You don't want to be so aggressive when you're in your mid 30s to 40s, and because if you lose the money, a lot of times, it's going to be harder for you to make that back because your age, life expectancy.
So
And if you're in your 50s, you want to go with a lot of more value stocks because now you're looking at money for retirement and those type of things. And so you're looking at more safer stocks that pay better dividends and stuff like that. Now, a lot of people ignore that, and they do ignore that for sure because people want, like you say, they want to make $1 million tomorrow. And this game is not a get rich quick type of thing. And you hear some people doing it, which is fine, right? And people do get rich quick, but that's a 0.1% of people that do that, and this game is building wealth over time, right? Over time and with strategic moves and strategic investments.
mhm.
So if you're young and you're out there, you're in your late teens, 20s, and stuff like that, be aggressive. Invest most of your money in the Teslas and in the Googles of the world, those big high flying stocks, Virgin Galactics, or those type of things,
So
because those move real fast. And for someone in their mid 30s and their 40s and 50s, I would say use 1 to 2% of those type of stocks in your portfolio, not 50, to 60 to 70%, because when it goes down, and a lot of times it will, depends on how the market is going. It's going to bring your portfolio down fast, right? So and that's that's my advice. The older you are, the more safer you want to be. So you want to be 50% in value and high dividend stocks, and maybe 25% in high flying stocks, high growth stocks, and maybe the other 25% in bonds. You're real young, you can go 50% in high growth stocks, because again, if you have time to make that money back if you lose it.
wonderful. And I think you just made, like, excellent point, because as we continue to teach you and as you learn, you'll understand symbols, you'll understand growth investing, value investing, income investing, and you'll also be able to understand how to look at companies and know which ones are in the sectors. We already talked about the sectors, so you can understand the difference between being in the tech sector or being in something a little more safer like a business or something like that, that moves in a slow, steady pace, the mutual fund type of consistent, steady preservation of wealth
Exactly.
instead of in a growth phase. And so I know this makes perfect sense to people now as they're learning more and more. And I think that what you said is perfect. At the point of your life that you're in, decide that way what you want to try and aim for. You don't need to, like you said, trying to take big old huge risky leaps, risk tolerance in
Hmm.
your older years, because you need bounce back time, you need recovery time. No one
Yep.
controls the market, no one can predict the market, but you can be predictable in your strategy, like you've talked about, with slow steady growth, and then having a how much am I prepared to lose kind of attitude. So I think that was excellent. Thank you for explaining how to set up, your basic investment goals. As you get more knowledge here, of course, you'll be able to make a more detailed plan as you work with us, even offline, in the stocks analysis portion of the business that we have, where you can sign up to be a kind of person that shows up to the live calls that we do, or to Wallace's information that he provides to let you understand how the market is moving. But you're able to now make investment decisions and set up your investment goals based on a complete understanding, not just off someone's random advice. And I think that's the best thing that we could give you as far as being able to set goals, because goals are even going to readjust, not only just by, like you said, the time period of your life, but they'll also adjust, as you say, as you grow in the market, as you have a higher pain tolerance, and as you gain more education, your goals will shift and your goals will grow and increase, and you'll have more informed goals. And thank you for just giving them that basic understanding of where to start with that mindset.
Right. You're welcome.